Looking at the Markets with David Modell.
Welcome to Looking at the Markets with David Modell. Today I have a very special guest. He is Mr. Arch Crawford. Now, Arch Crawford cut his technical analysis teeth as first assistant to top Wall Street technician Robert Farrell, or Farrell, as the case may be, at Merrill Lynch in the early 1960s. In 1977, following Arch's extensive research into astrophysical phenomena, astrology, and its correlation to market performance, he edited and published the premier issue of Crawford Perspectives market timing newsletter. Today, nearly 30 years later, Crawford Perspectives continues to bring readers one of the most highly regarded and consistently accurate market timing newsletters available, and that is available on the internet at www.crawfordperspectives.com. I recommend everybody check that link. But for now, Mr. Crawford, thank you for joining me today on Looking at the Markets.
Delighted. Actually, it was 40 years last May.
Oh, my goodness. Wow. Well, congratulations, and that's fantastic that you've been bringing this information to people, to the public for so long. And your track record, could you take a moment to tell us about your track record?
Well, I've been number one market timer several times over the years. I think, I don't have it in front of me, but it was 87, and then 92 to 97, and then 2001, 2. I predicted, actually, the crash in 87, and I predicted the war, that U.S. would be at war around 9/11. I missed it 3 days, actually. And then I was number 2 in 2002 these are stock markets, and number 1 in 2008. You can go to YouTube and see me on CNBC as number 1 in 2008.
I have seen that video, yes.
Then I was number 1 in the bonds, I think, in 94, and number 1 in the gold in 2006.
That's quite an impressive track record. So what I think people want to hear from you now are, where do we go from here? And that's in regard to the major indices as well as some commodities that we'll be talking about today. So we're going to present some charts that you were kind enough to send to me. And the first chart that we can look at, if you like, is actually not one chart, but 4 charts in one, including SPX, which is the S&P 500, the Dow Jones, DJIA, NDX, which is the dollar, and the 30-year
that's
bond.
The NASDAQ 100.
I'm sorry, I said the wrong thing. Yes, and that's the NASDAQ, I'm sorry. And the 30-year bond weekly. So whenever you're ready, we can go through those.
Okay, well, the main reason I wanted to show these 3 in the most recent forms is that they all hit new highs yesterday. New highs for the move, new highs, all-time highs, I think. But if you can look at the charts, you can see that the strongest one is the SPX, where it is gone above the lines of resistance, and is well above the 50. All of them above the 50-day moving average, and well above the 200. That's the red line, and the 200-day moving average, which is the blue line that's lower. So they're all in strong uptrends. But as I say, the S&P has made a stronger, higher high. The Dow Jones, it looks like it made a slightly higher close, but not a higher high. If you look back at where that first arrow to the right is,
right,
you can see that it did not make a higher high so far. And on the NDX, it looks like it's pretty much stalled out with several highs right around 6,000, and it closed, I think, today at 6,004 and a fraction. So it is a new high, but it's not as dynamic as the others. It's right about a little above the middle of the rising trend channel, and the Dow Jones is at the top of its trend channel, and the SPX is above its trend channel. So
Sure.
I just thought that was interesting to note how the major indices went, but they went with very different. They made the new highs with different levels of strength, actually.
Sure.
And we can go to whatever you like after that.
All right. So so we definitely see different levels of strength, but still, you're right. Yesterday, new all-time highs, a lot of celebrating. So I thought that was pretty interesting as well.
Oh, and projections for the future.
Yes.
I'm looking for a very strong rally into December, but I'm not sure if it started already or if we'll have a dip into October or not. The normal seasonal pattern is to dip down, and September is generally the worst month of the year.
Right.
And then it bottoms in October and turns around. That's the typical seasonal pattern, and it happens often enough to bet it.
Right.
So I'm still betting for I don't know, I said in the newsletter about a 5 to 8% decline before the super rally starts taking place. It's possible, though, that it's already started, so I'm cautious about that. But I will be more clearly bullish about the markets as we get towards and past the time that it frequently hits lows.
Sure.
So I think late October, November, and into December are going to be surprisingly strong, and it's going to look crazy, and it will probably peak out in December or January, and then we could have more difficulties making headway next year.
Gotcha. Does this fall in line with the old saying, sell in May and go away, and then don't come back until, usually they say, Halloween Day?
Yes, something like that. The bottoms, the crash dates more tend to be in October, but then it turns around quickly from a crash date usually. So
right.
The October, by the end of the month, is not your worst month. It used to be.
Gotcha. All right.
September is the worst month.
And now it's September. Right. Interesting.
And December's the best, I think.
Yeah, December's the best. Okay. All right. I'm taking notes. Very good. So I wanted to look at some of the other things, such as, did you want to look at the 10-year bond rate, the TNX?
Sure. They were talking up the interest rates, the Federal Reserve was, for the last year or so, and they took it up, I think it was in late 16, where the rates actually did go up sharply. But after that, they keep talking like they're going to take rates up, we're going to take rates up. But I looked at the charts and I said, I don't see that interest rate being strong enough, steady enough to keep going up.
Right.
And it started pulling back, and then it pulled back some more, and then it pulled back some more. And now it's holding moderately steady around the 50 and 200-day moving averages.
We're looking at the chart now, and we see a couple of failed attempts to raise rates.
It went down
and
hit the low late last week, I think it was. And since then, the next 3 days have been sharply higher, from about 2.03. Early September was the low, but early July was the high.
Right.
You had a sharp move up into early July, went up to almost 2.4%.
Yeah.
And it's been coming down and accelerating down the last week or so, faster and faster on the downside, and now it is turned rapidly around in just 3 days, Monday, Tuesday, Wednesday. It's gone up from 203 to 219, so it's 0.16 higher than it was 3-4 days ago.
Sure.
So that's a bullish possibility. It's still got to break above the 50-day moving average, which is the red line, and preferably also the 200-day moving average, which is the blue line that's higher up around 2.33 or 2.34. And those are heavy resistance, and I personally doubt that it'll make it past the 200-day blue line.
Gotcha.
But
So,
that's my opinion.
Right. Okay. So it sounds like it's kind of a wait and see type of situation. We're not going to necessarily take a position in this.
Right.
Yeah, which makes sense to me. Sure. Great. And then if you wanted to talk about the U.S. dollar index, I noticed you've got a wonderful monthly chart here. Taking a really long view of things with these monthly charts. And the U.S. dollar has been getting hammered, as people know, in 2017 so far. Every time it seems to be ready to just consolidate or poke its head up, it just goes right back down and then some. So what's going on here?
Well, what it did is it went up. You can see the last year or two, it stopped at about par. It looks like 100, 101, 101 and a half, about in there.
Right.
And we have sideways lines there and sideways lines at the high that was actually made. Both of those are technical highs that were long, long ago, but they were powerful highs and lows at those prices. And those prices, I put those lines in there before this recent action, and you see that it stopped at both of them.
Yeah.
And that, having hit the highest high, I think around January 1st. I don't know if it was December 31st or the first day or two of January. But it's come back down to the red line, which in the monthly chart, it's 50-month moving average.
Yeah. Okay.
And so there is some that may turn it around briefly, and then we'll have to see about that. But we are down to where it might attempt to turn back up.
Yeah.
So it is again unclear what it's going to do next. But there is further support down at the 200 month moving average, which is about 89.
Yeah, it looks like it. Wow.
So
it's
I doubt if it will continue to collapse.
Okay.
Right away. It might do a flag pattern to the upside and then collapse on down to much worse. We could go to what 80 is the strong sideways support that was the average price there for several years.
Yeah, I see that. Yeah.
Where the red line is the 50-month moving average, and you can see it got narrower and narrower before it broke out to the upside and ran up in at 14. I think it was. Yeah.
So it's really at a decision point now. It's right up against the 50. I'm so accustomed to saying 50 meaning 50-day moving average, but for you, it's 50-month moving average, which is a long...
Well, it depends on the chart you're looking at. The traders use those a lot.
Yeah.
And I find that they're frequently support and resistance areas on the 50-day, the 50-week, and the 50-month.
Right.
But the 50-day is the most popular one, so that
sure. I'm so used to that
keep an eye on that no matter what.
So if it breaks through the 50, which in this case means 50-month moving average, it might have support at the blue line, which I think you said is the what is that? The 100 or the 200?
200.
The 200. Right. Okay. If it breaks
but it's
through
also where it stops, where the red line is also the previous low from last year, from 2016.
Okay.
So you see, it's a double technical support there.
Yeah.
And therefore, you would normally expect to get a bounce, whether it was going to be a major change of direction. I doubt that too. It'll probably stay in that area for a while.
Okay. I'm looking at things with a fresh perspective. This is great. If you'd like to turn to one of my favorites is gold. I love the precious metals. Whether it's GLD, IAU, those are the ETFs that are so popular, or for people who have the, just are interested in the physical, so they might look at the spot price, which I believe we're looking at now.
Well, this is the current contract.
Right.
So it's the COMEX trading, but it's for the nearest month delivery.
Okay.
And that changes every couple of months, every 2 or 3 months.
Gotcha.
So anyway, you see the long-term downtrend from the high in 2011 with touched another high in 2012, and we have recently run into that same high several times.
Yeah.
Along that same trend line. And it finally broke out of it briefly a while back and failed, went to a lower recent low, and then this time it has broken out clearly on the upside, which is a very strong sign.
Right, right.
So I would like to see it break above the 2016 high, which is about 1370, high 70s or 1380.
Right.
So if it breaks above that, that would be even better. But it is the strongest sign we've seen in the last 5 years.
Sure. I
like it.
Yeah, I like it too. Can it ever reclaim its former glory in the 1800s?
Well, I remember the old high was like 1922 or 23 or something like that.
Yeah.
But I believe it will, and I think that the dollar will eventually go much lower. And there's Arab countries that are forming a gold-backed international currency.
Mm-hmm.
And also I think Russia and China are talking about forming another gold-backed currency. So unless the dollar gets in line with that, it's going to be much lower in the next few years.
Yeah. And as people know, the dollar, U.S. dollar and gold tend to go in opposite directions. So whatever is good for gold probably is not so great for the dollar and vice versa. Got it.
Well, yes. Well, that's just because we're looking at it, its price in dollars, but you can also look at the price in euros or Swiss francs or Russian rubles or whatever. And sometimes you get different chart pictures depending on the weakness or strength of the other currency.
Right, right. Gotcha. All right, very good. So sounds cautiously bullish on gold, possibly. Very good.
Well, it looks good in several currencies right now.
Yeah, yep. Dollar, maybe not so much. And then finally, we've got oil, which, I like to trade oil. For me, it's had a range between $40 and $50 a barrel recently, ever since that horrendous downturn when oil used to be $100+ a barrel, went down to around 26 and change, and then now it's in a range. So what do you think?
Well, that's the best call I've made in the last few years. When it dropped below 90, it was in a big triangle pattern, not shown here, and it stayed technically weak all the way down, and I stayed with it in the newsletter. They just stay short in oil, stay short in oil, stay short in oil. And that's it went down to 26 and started bouncing around there.
Yeah.
And has been in the area of 34 to 55 in the last couple of years.
Yeah. And I see that. And I see the what looks like the blue line, which I believe you told me is the 200. Appears to be just going sideways, and we've got the 50, which is again not the 50-day, 50-month, right?
Oh no, this one is a daily chart.
Oh, this is a daily chart. Okay, so we're back to the 50-day. Gotcha. So it looks like the 50-day moving average is starting to curl up a little bit. The 200-day is going sideways. Not sure what to make of this. What do you think?
Well, it's been in that range for a very long time, and it looks like it could stay in there whether it breaks down from here or up than here. I would say that the last few days it's looking a little stronger, so it may try to go back over 50, but it's really got to get over 55. Was it 55.24?
Okay.
Was the highest that it's been since 2015.
Right, it's right there on the chart. 55.24, the high, the most recent high at least. Yeah. Gotcha.
Right, so it's not exciting right now. It's got to break out one way or the other, and then put on another leg.
Gotcha.
So,
Very good, sir. Very good. Wow, so much to learn.
I'd say the most exciting thing right now is the gold.
Yeah, yeah. I really like that gold chart. I like all these charts. But if I were to be,
of course, the current the bitcoins and the other things like that, which are going absolutely nuts, and which I've pretty much stayed away from.
Right.
I don't think it's in a healthy enough trend for anybody but a trader to be in it.
Yeah.
Although it may take over everything and go to $1 million, who knows?
Yeah.
One of my favorite books on the topic of markets is Extraordinary Popular Delusions and the Madness of Crowds.
Charles Mackay.
Written by Mackay, and I think it was
Mackay.
1849.
Yep. I believe it's Charles Mackay, yes, or however it's pronounced. I've actually read through that, and it's still relevant today. And the way he chronicles everything from the tulip madness to it's like we've seen this movie before.
Yes, and the patterns are similar.
Right.
So when you get into a situation where things are going a little crazy, and I don't understand the Wall Street papers and newspapers and everything says, "Oh, you can't tell when you're in a bubble." That's ridiculous. We are in several bubbles right now, and I don't remember who said this first, but it looks like a flock of black swans looking for a place to land.
That's a great image. Yeah.
Black swan being an unusual statistical event that's extraordinary.
Yep, exactly.
And usually in the negative sense.
Yeah. Not too many welcome black swans. They're usually right. Well, I've been speaking with Mr. Arch Crawford, and I'd like to talk about your website. There's so much on here. First of all, people can see your record. If there are any doubters at this point, after listening to you and watching all these charts, I don't know why somebody would have any doubts. But if they did, they can check your record. They can learn about you. They can see all of your press. You've been covered from CNBC, so on and so forth. And they've got you in the news, events, and so on. Now, as far as the newsletter, what can people expect if they sign up for that?
Well, it's 12 monthly issues, and it costs the same as it did in 1977, $250.
Wow.
You can get a half year for $140.
Yeah. So inflation has not been an issue with the newsletter. You've put it out there, and you've kept it affordable. And how often? I'm sorry. This is a monthly newsletter. And you give your, assuming that there are charts in there, projections.
Well, the charts you just looked at are in there.
Yeah.
And also a technical chart of the new 52-week new highs on the New York Stock Exchange, and it shows a long downtrend of the number of stocks on the New York hitting new highs, while the market indices have continued making higher highs. The number of stocks are getting lower and lower as fewer and fewer are making new highs.
Right.
And that's a dangerous long-term technical pattern, but it may take months to exercise the negative potential.
Right. Yeah. Market breadth is a consideration. Whether how many stocks are participating. Is it just a few? Is it just the Amazons and the Teslas and the Netflixes carrying the market? Or
they have been carrying a huge percentage of it.
Yeah, and that might not end well.
That means we are probably in a bubble.
Could be.
It could get more so before it has to end.
Right. Well, the market can remain irrational longer than we can remain solvent. I believe that was John Maynard Keynes who quoted that one. And
I believe you're correct, sir.
Yeah. I get it right once in a while. Well, I've been speaking with Mr. Arch Crawford, he's been on 2020, Geraldo, Good Morning America, Wall Street Journal, etc., CNBC, and so many more. And now he's been so kind to take a few minutes to speak with me, and I recommend everybody go to crawfordperspectives.com, check out all the free stuff on there, and then sign up for the newsletter. He has not increased the price, and he's kept the quality consistent. His track record is, I don't know anybody who beats this track record. It's really something. So people should definitely check that out. Are you on social media as well, or is it mainly the website?
I have 3,500 people following me on LinkedIn.
Not too bad.
That's the more professional of the.
It is. I would say so. Yeah. So if people type in Arch Crawford into the search box and LinkedIn, I'm sure they can find you, no problem.
Yes.
And if people want to contact you, there's a contact link right there on the website, or what is the best way to get in touch with you if they have questions?
Well, there's you can email crawfordperspectives@earthlink.net.
Gotcha.
Or you can call the office at 520-577-1158.
Great. I'll put all that in the description. Once again, crawfordperspectives@earthlink.net or 520-577-1158. Crawfordperspectives.com is the website. Crawford Perspectives is the newsletter.
One more real short note.
Sure.
I was a technical market analyst at Merrill Lynch in 1963 when I read on the front page of the Wall Street Journal about people who were using planetary movements in predicting markets.
Right.
So that's how I got interested in it. But as far as I know, I'm the first person who ever actually calculated percent changes in the Dow Jones going all the way back to 1880s for many, many different astronomic relationships.
Right, right. Well, you did it first, and I would say you did it best because, again, the track record speaks for itself. Can't dispute the numbers and can't dispute the profits.
Thank you very much.
So thank you, Mr. Crawford. You're welcome back anytime, sir, on Looking at the Markets.
Delighted to be here.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.